Welcome to The Explainer. Today, we're going to dive into some key insights from ET Wealth and try to build a real practical blueprint for your financial life. We're talking about everything from how to fund those huge dreams to building an investment portfolio that can, handle whatever the market throws at it.
Okay, so let's get right into it. Think about it. That dream wedding, a huge trip around the world, a totally secure future. It feels like you can only have one, doesn't it? Well, what if you didn't have to choose? Today, we're going to explore how you can actually balance these massive, amazing life moments with, the smarts of building real, lasting wealth. All right, first up, let's talk about those big, exciting goals. You know the ones I mean. They make for the best memories, but wow, they can come with a pretty hefty price tag. I mean, who doesn't love the idea of a destination wedding? But the cost, man, it can spiral out of control fast. We're talking anywhere from 20 to 60 lakh rupees. And if you look at where that money's going, it's pretty eye-opening. A full 50%, half of the entire budget, just goes to the hotel for the rooms and the food. So that right there, that's our first big clue on how to make this dream happen without going broke. But here's the great part. You don't actually have to give up on the dream. You just have to be smarter about the cost. A couple of clever moves can make a huge difference. Like, what if you swapped a big city for a beautiful Tier 2 spot like Kasali or Jim Corbett? Or, get this, booking in the off-season. That can slash that giant hotel bill by 50, even 60%. And hiring amazing local artists instead of flying people in, boom, you save a ton on their travel and stay. See, it's not about being cheap, it's about being strategic. And you can apply this exact same thinking to your holidays. That big end of your trip, it doesn't have to drain your bank account. If you pick a place that gives you great value, like Vietnam, your daily costs could be half of what you'd spend somewhere like Dubai. And you're not sacrificing the experience at all. It just means your money is working a lot harder for you. Okay, so you've been smart with your spending on those big life events. Now you've got some capital you can put to work. The big question is, what's the right way to do it? And that brings us right to the heart of building wealth. Smart and, maybe more importantly, resilient investing. I love this quote because it completely changes how you should think about investing. It's not about winning the sprint for the biggest returns this year. It's a marathon. It's about staying in the game. The parallel they draw is just brilliant. It's like Roger Federer. He wasn't a champion because of one single killer shot. No, it was his unbelievable consistency all over the court for literally decades. And to this chart, this shows you exactly why that consistency is so important. Just look at it. The best performing asset class, it's all over the place every single year. One year, it's small cap stocks flying high, the next it's gold, then silver comes out of nowhere. If you try to chase whatever did well last year, you're almost guaranteed to lose. The ground is always shifting. So this brings us to this really cool idea called strategic mediocrity. Okay, I know, it doesn't sound very exciting, right? But trust me, this is the secret sauce. It's about building a portfolio that's so well diversified, with stocks, bonds, gold, all of it, that it's not trying to be the number one winner in any one year. Instead, the goal is to be a solid, competent performer no matter what the market is doing. It's designed to survive the downturns and just keep steadily growing through the good times. Because what's the alternative? Putting all your eggs in one basket. And yeah, it can feel super exciting if you think you've found the next big thing. But for pretty much all of us, the risk is just too high. One bad bet could wipe out a huge piece of your savings and just totally throw your long-term goals off track. That's why diversification is your absolute best defense. Okay, so having that diversified base is absolutely crucial. But you still have to keep your eyes open for some very specific traps out there in the market today. And there's one in particular that's catching even really smart investors by surprise. Here's what's going on. There are some limits on investing overseas right now, so the demand for the few global ETFs we can buy in India has just shot through the roof. And that demand has pushed the price you pay on the market way, way above what the fund's assets are actually worth. That's called the NAV. You can think of the NAV as the real fair price, but people are paying premiums of over 20%. It's like paying a ticket scalper a massive markup. You're just paying way too much to get in. And this is where it gets really dangerous. Let's do the math. Say you buy that ETF and you pay that 20% premium. Now the stocks inside the fund do great, they go up 10%. You'd think you're making money, right? But what if all that hype dies down and the premium just disappears? The price you can sell it for drops back down to its real value. And just like that, you've actually lost over 8%. It's a crazy situation where the underlying investment does well, but you still lose money.
You know, at the end of the day, all this stuff, financial planning, investing, it's just a tool, right? It's a means to an end. The real goal for all of us is just a life of well-being. So let's zoom out a bit and connect the dots between our money, our health, and, yep, even our taxes.
So there was this recent wellness survey, and it gave India a score of 72%. But honestly, the number itself isn't the most important part. It's the trend that's worrying. Our overall sense of well-being has just kind of stalled. It's hit a plateau and hasn't bounced back to where it was before the pandemic. And a huge reason for that is stress. A crazy number, 73% of people feel like their high-pressure jobs are having a direct negative impact on their heart health. And that's the thing. Financial stress and work stress, they're not separate. They're totally linked. And together they just chip away at our quality of life.
So a huge part of managing all that stress is just getting ahead of financial anxiety before it even starts. And let's be honest, nothing causes anxiety quite like taxes. So let's circle all the way back to weddings for one last super important tip. The gifts you get are usually tax-free, which is great. But, and this is a big but, you have to be able to prove they're actual gifts. So keeping things like the invitation, a list of who gave what, some photos, and the bank statements, it sounds like boring paperwork, but it can save you a world of hurt later on. All right, so we've covered a lot of ground, from saving on weddings to avoiding market traps and thinking about wellness. So what does it all boil down to? What are the big takeaways for your own financial life? Okay, here's the blueprint. Number 1, spend smart on the big things. Be strategic. Number 2, invest for resilience. Don't just chase the highest returns. Build something that lasts. 3, keep your eyes open for current market risks, like that crazy ETF premium we talked about. And finally, number 4, never forget that your financial health is just one piece of the puzzle. The real goal is your overall well-being and happiness. So I'll leave you with one last question to really think about. Take a hard look at your own financial plan. Is it built for resilience? Is it built to get you through any kind of market? Or is it just built for today? Thanks for joining us for The Explainer.